Hello and welcome back to another video. Today I want to talk about the top stocks I am buying in this coming up month of June. A lot of these stocks you're going to be able to see repeats from previous videos. There's reasons for that. We like to do that research and make sure we're buying good quality companies at a good value. And we're going to hold them for the long run, ideally. Granted, some of them we get stop loss out of. I'll kind of discuss that a little later on in the video. For those of you who like the video, smash the like button, subscribe for more videos, go back and watch some of the previous ones. There's a lot of good information in them. And let's get right into the video. I'm going to kind of rapid fire through them today. I'm going to discuss why I bought each one and why I'm continuing to buy each one. And we're going to start it off with Big Bear AI Holdings. This chart was taken pre-market opening today, which is fine. That's when I started making the video. And not much has really changed from what you see in the pre-market. It's up like 20 cents or so right now. The reason why Big Bear AI, it's been on my radar for a while. I think I started buying it almost a year ago. And I think they're strategically set up where they're gonna receive a lot of this AI and defense contracting and profitability from that, but they're also in the cargo and security aspect when it comes to they just got the contract with Panama for the dry canal or dry cargo going through Panama. And that is going to be yet to kind of reveal itself on how much they're really going to generate from that. But they broke above all moving averages. Let's change that little error right there. Um, they broke above all their moving averages today. As you can see, they broke above their 150, and they're heading towards that $6 resistance, which is exactly what I've been calling to say that was going to happen. I see this being a $7 to $8 stock. That's what I'm in for. They have huge momentum behind them right now with all the ongoings. You're talking about drones, a bunch of contracts coming from the government, and Big Bear AI is going to be kind of relative to most of it. So the chances of them actually being able to expand on that opportunity is going to be quite huge. They had a positive 25.93% EPS of the trailing 12 months to the previous trailing 12 months, and 98.18% growth quarter to the same quarter prior in the trailing 12 months. So that's excellent growth. That's exactly what we're looking for in a growth company, let alone such a small market cap such as Big Bear AI, which means this company has massive room to grow. You can see I highlighted in here their 52-week high is only $9.39. There's a good chance by the end of the year we might be able to see prices close to that again. I don't know I'm not a financial advisor. This is not financial advice. This is just what I'm doing and what I'm investing into this company for. I'm truly here for the $7 to $8 range. I think they got a lot more room to grow past that. But once these earnings start coming out and this growth just starts ramping, it's going to be insane what this company can really do. They got 90% of their income is from the government and then shipping channels. I already brought up the Panama, but the shipping and receiving, doing the AI scans of cargo. They're in airports across the world. They're still growing in that retrospect. And currently, there's a lot going on, especially in the United States with the airports. They were talking about trying to privatize them, or at least the security inside the airports, in which case that can either be really good or really bad for BBAI. I'm leaning towards it's going to be towards the good since they're proving their track record at being able to handle these security lanes and be able to do what they said they were going to do. So their guidance is 135 to 165 million. And in April, I put in a call to buy. If you watched the previous video for stocks I was buying in April, of $3.58, and it is up over 26% from there. I believe they still got plenty of room to grow. They are still a buy in my eyes, especially if we drop back down to this lower resistance, which is about 410, somewhere in there, which we had this whole buying opportunity over the last like couple months to be able to be loading up on Big Bear AI, which is exactly what I was doing. All right, moving into the next one, we're going with Rocket Lab. So, Rocket Lab, this is a high speculative buy from my side. The reason is mostly around this SpaceX IPO, and obviously what just happened with Blue Origin. That's really sad to see when things don't go well, and actually slowing down the space race, essentially, is what it's doing. But effectively, when their platform got damaged, their launch platform, that actually eliminates them from the existing current right now competition, because they got to make those repairs, and they said it could take months if not years to be able to do that. Now, are they going to be out of the running? Absolutely not. I don't think so. And I'm actually going to make mention of that when we get into Amazon a little later on. Spoiler. Um, but I believe Rocket Lab is going to be a buy right now, all the way up to the IPO and maybe even through SpaceX's IPO. Now, there's going to be a lot of speculation around that as to what's really going to happen, and nobody really knows for sure. There's so many what ifs and black swans that can happen that can cause either Rocket Lab to go insane, it could cause it to go back down to their 52-week lows. Nobody's ever going to be able to tell you any kind of different, but we are going to do our research to try to make the best educational guess that we possibly can. And we're going to go into the reasoning. So, once again, it was sad about the Blue Origin rocket. I'm very thankful nobody got hurt, and that was the best case scenario, is that nobody actually got hurt from it. From what videos I saw, it was a pretty massive explosion. Kind of crazy how that's going to work, but they're all in it together. Rising tides floats all ships. That's kind of the way that it goes. So when you have bad news, it also directly affects every single stock and company that's doing the same thing. And you got the SpaceX IPO on June 12th, and that's anticipated to be 1.8 to 2 trillion dollars now. They were talking about it being a trillion, and now it just keeps going up and up. This has huge potential prior to and during the IPO. My guess is it's going to be up 40 to 50% from today at that 123.71, which obviously this is taken during market today, and they're down pretty significantly. I think they're going to get a little bit closer to zeroing that out by end of day. And I think there's going to be a 30 to 40 sell off afterwards, which is going to bring it right back down to where we are today. So if you are in it for a quick and easy buy, make sure you set up your stop losses. If you're in it for the long haul, then I think Rocket Lab has tons of room to grow. And I think the space exploration and travel is going to be a huge part of our future. They got $1 million Space Force deal with a $2.2 billion backlog. That's a huge backlog. This company is going to have income for many years to come. And they only converted 37% of their 2026 backlog, leaving 1.38 billion at the end of 2026 going into 2027, and that's with no additional contracts. So once again, they have multiple years of income already calculated in. And in April, I put a buy call at 67.73. The current prices of Rocket Lab, it is up over 100% from there. Now, I did make mention of stop losses. If you go back and watch any of my previous videos, you're going to hear me talk about stop losses. I actually did a video on how to manage your portfolio. That's always going to be there for you. I'll leave it up at the end of this one, a link to it. And the big reasoning behind stop losses is you don't want to miss out on the rallies. So, yes, I got stop lossed out of Rocket Lab. Yes, that sucks. Right now, we're back into another buying opportunity for myself to be able to still hopefully generate some wealth off of the SpaceX IPO. Now, is that always going to happen? No, it's once again highly speculative. I know I keep saying that. There's a reason for it. This IPO can end up falling through for all we know. It may only generate 1 trillion and everybody's mad and starts massively selling off, causing people who are holding onto their bags to lose money. All of them are real world scenarios that could happen. So you got to do your research and take the best educated guess and manage your risk portfolio. So yes, I did get stop loss out of Rocket Lab. I believe it was at like 112 somewhere in there, and that's absolutely fine. I made money. That's still almost a double up from where I was, about 70 to 80% and profit that I pocketed, and I bought 10 more shares today because of the pullback. So SoFi, going right into the next one. SoFi, everybody knows SoFi by now. Fintech, but they're on the verge. They're merging into new banking, which is what I'm going to be calling it. And this new banking is going to consist of cryptocurrency and utilizing cryptocurrency and kind of bridging all of the financing together under one house. And I believe SoFi is going to be the trailblazer that does that. Right now, SoFi's been going around in this resistance down here around the $16 to $15 mark. It's kind of been bouncing. It's been choppy waters. We did see a little bit of a rally up a few weeks ago, and we got bounced right off of that $20 resistance. By the end of this week, I anticipate we're going to be seeing that resistance again, which is an additional about $1.80 from today. And I think we will end up breaking through that. Are we going to stay above it for longer than a day or two? That I couldn't tell you. There's a lot of different things going into this stock, especially with the cryptocurrency. And once again, trailblazer. So you're getting in early on the ground level of what the future of banking could possibly be. And SoFi is a great place to be putting the money. They got great growth, all in all, and they're changing the market. And don't you wish you were buying Apple when they first came out? They changed the market, right? Same thing with Microsoft, Google, all of them. And with that being said, SoFi's in that stage now. Could they fail? Absolutely. Do I believe they're going to? Absolutely not. I think by the end of the year, we're going to be over $20 a share, and we're going to be hovering in between $22, $23. Are we going to see $30 by the end of the year? That I couldn't tell you. You got a pretty heavy resistance up here around the $26, $27 mark. And there's going to be a lot of people selling because they were buying back here and they're going to be taking their money back. So you always got to be aware of that, especially when you start moving through these upper resistances. Now, that's all going to depend on momentum and earnings reports. You can blow through it and just people are going to buy up what everybody's selling. I'm hoping to be one of those buyers. I'm still buying SoFi even today. EPS growth, trailing 12 month to previous 12 month is up 7.32%. And then quarter of the previous same quarter is up 100%, which is fantastic to see. SoFi USD stablecoin is the first issued by the national bank on a banking platform, meaning they are utilizing cryptocurrency to make transactions through their banking platform, which is going to bridge everything together. It's going to bridge crypto and traditional finance, which is just going to make everybody's life easier, hopefully. There's going to be a learning curve with all of that, as there always is. People couldn't just instantly use a smartphone. You had to figure out the features, right? But I had a buy call in April, which was at $15.85, which is already up 15% from today. So if you're paying attention to the previous video, you made 15% if you were to have bought. Now, please, when I say these, don't go buying and spending all your money on it. Make sure you're DCAing in, you have a budget, you have it set up to where you know how much you have to be able to risk, because every bit of investing is a risk, no matter what anybody tells you. Safe investing truly doesn't exist. Now, you have safer investing, which obviously um, you're kind of regulating your risk pretty high, but there is always still a risk no matter what. So, all right. RR, or Rich Tech Robotics. All right. I don't really, to be honest with you, I don't have a ton of information because they're not like a highly, they're still like a micro cap. Um, so there's not a huge amount of information out there on them. And with that being said, they have been having these robot demonstrations being installed. So they had one installed in, I believe, New York, Chicago, Las Vegas, and they've been doing a lot of really cool stuff with the robotics. And there's another reason why I'm so heavily invested. I never really covered this in a previous video. I always just kind of talked about the cool things they were doing with robots, but everybody says robots are a part of the future, so why not get in on a robotics company? Now, they are currently at 308. They're up a little bit today, and they do have a couple of lawsuits going on. So you got to be wary of that. Do your own research into it. But they did sign a letter of intent with SoundHound. So now these robots are going to be able to talk. It's crazy. But they got new robotic demos coming out all the time. They are changing their demographic or their pay structure. So now they're doing a robot as a service contract instead of just a one time sell your robot. So that means it's going to be reoccurring income, which is already $692,000, which for a small cap, that's going to be huge. And they got $5 million in annual revenue. So you're talking, it's not even a fifth. It's not, it's like a 12th of their actual income or revenue is going to be from this robots as a service. But I'm hoping to see that that is actually going to scale and scale very heavily. Now, I did call a buy in April at $2.06, which is up over 33% today. So I'm not just calling out companies that I haven't done my research in. I'm doing research into all of them. You can watch the videos. It's not like I'm just spouting off numbers. We take a look at the charts and we discuss the chart, where the resistances are, which direction we have momentum, and where the buying opportunities really are, and where we actually see the stocks overall. Now, we're hovering right around a resistance at that $3 mark for RR, and I believe they are going to be a $4 to $5 stock come the end of the year, if not even further, especially since they're branching into a robots as a service style pay scale or profit. And but there's always a chance that it's not going to scale the way that they want to go, because some of these companies are just going to want to buy the robots. They're not going to want to buy the as a service product. They're going to want to just buy the robots by themselves. And that's absolutely fine. I'm hoping that it scales to where they can continue providing services, especially to some of these bigger companies that are spending huge kind of expenditures, capex into robots, AI infrastructure, all of that, and that would be a part of it. So RR is still a buy to me. Anything under $3, I think you're getting a hell of a deal. I think it's going to go up $4 or $5. That's 30-60% gains, and it's it's going to be around for a while. There's a chance they could always get bought out, but that's only going to be good for stockholders as well, as long as they don't go bankrupt. But with this reoccurring income, I don't see that as a problem. All right, Trade Desk. There has been so much hate on Trade Desk, which I understand it. Competition's huge. It's massive. You got Amazon, you got Google. All these companies are massively competitive to what the Trade Desk does, which is essentially online advertising. The reason why I can't talk enough about Trade Desk is I think people are missing the point of that AI is going to become ad revenue based, which they're anticipating that sector to reach $142 billion by 2030. So you only got a few years left before AI is just everything's ad revenue based. And of course, there's going to be subscription, uh, where if you have the subscription for the AI, then you don't get the ads. But if any of these massive AI companies end up going with the Trade Desk, because it's what Trade Desk does, then that's going to be massive for them. Landing a huge contract like that, everybody's going to be clawing at their screens trying to get more Trade Desk shares. That's just my opinion. Does not mean it's going to happen. That's just what I'm anticipating will happen for me and my own risk management, my own risk portfolio. Now, they are a $10.14 billion company, and they had $2.89 billion in sales last year, and that was with $2.38 billion in profit. That's what's crazy about this, is they don't have a ton of overhead. So a lot of this is going straight into profit. I did have a call to buy at $21.36 in May, and they're only up 5.6%. Once again, they're getting a lot of hate from everything, especially with it going AI and the huge competitiveness of the rest of the market. But I think they're going to position themselves very well to be stay profitable. And we're going to move right into the next one, realloys, minerals, rare earths. That's pretty much what you need to know about them. They are actually technically like a software or telecommunication company, I believe, which that's what they're classified as. But they're really designing processes to be able to get rare metals, rare earths out of, or refining rare earths. And during those processes, they're able to get multiple different elements from these rare earths and these mines, which is why they're receiving government funding and defense Department of War contracts for certain elements, and they make magnets, which magnets are used in all of the technology for tanks and jets and drones and everything that requires magnets, especially in the Department of War. They're going to pay high dollar for it, especially if it becomes American made. Now, they do have multiple memorandums of understanding with multiple sources supplying RE with rare earths. That's going to be huge. They're still a very young company, which is makes them kind of speculative, because are they going to make it? Are they not going to make it? When are they going to become highly profitable? All that's going to be kind of up in the air. But I did have a call to buy them in April at $9.19, which means they're already up 18%. And their 52-week high is $26.90. They're currently at $11.25. I think that they have plenty of room to grow, especially American made. When it comes to Department of War, they're always going to prefer American made, and Realloys is attempting to break into that market and do it themselves, which I think they, with all the contracts they've been getting and the opportunities to make sure they have continuous sources of rare earth coming in, they're setting themselves up for extreme growth in the near future. I do see them coming back up to being a $14 to $15 company or stock. That's probably where you're going to have a lot of resistance. I know I don't have any resistance lines set. We're actually above them all right now. The next one would really actually be right up here at the $18-ish mark, but I don't I don't think a lot of people are going to be willing to hold when they've already been seeing, you know, 100% on their returns. So at $14 to $15, I think there's going to be some selling off and we're going to hit a pretty strong resistance. Now, I could always be wrong. We could break right through it and move on up. It could go back down to this lower resistance at about $9. Um, but I'm holding for the end of the year on this stock to see where it really goes. Celsius Holdings, and this is another part of the trade desk that I think people are not really understanding is we don't have a consumers market right now, meaning the consumer staples and everything's been kind of on the decline, which means you're not going to have as much ad revenue and things coming in because you have less people shopping online, so on and so forth. And Celsius Holdings is going to be one of them since they are a extra. They're not a needed thing given their energy drinks, but they have great growth. And as soon as the market starts to shift and we see excess spending again, meaning inflation comes down, job reports are up, we cut rates, Celsius is going to be skyrocketing with their income growth and revenue growth. So currently they're at 31.21. They had a 52-week high of 66.74, 52-week low of 27.66, which they were just at not too long ago. And they are still a buy. They should be around $45 to $50 right now, in my opinion. Their EPS growth trailing 12 month to the previous trailing 12 month is 34.28%. So they are moving up. Their EPS growth quarter to the previous quarter, the same quarter of the previous 12 months is up 120%. So they got massive growth. They got they're buying other companies out. They got the Pepsi distribution. They got so many positives moving for them that I think they are going. I wouldn't be surprised if they're double up by the end of the year. Now, don't hold me to that because investing is always a risk and a gamble, but that's what I'm shooting for. I could see it happening, and that's what I'm buying for. So I had a May buy call at 29.72, which is already up 5.52% today, which means you'd already be profitable if you would have bought at that point. So make sure you go back and watch some of those videos. I talk a little bit more on the chart. Actually, it's probably about the same amount as today. I like to try to cover a range of stocks every single time I do these videos. So that way it's not all tech, it's not all consumer staples, it's not all rare earths. We always talk about diversity, so make sure you have a little bit in your own portfolio. Now we're getting into Amazon, which again, I talked about the Blue Origin. Thankfully, nobody was hurt, and hopefully everything can resume to normal processes shortly. They are down a little bit today, $7.14. They were right around the 52-week highs. As you can see in here, we're only a couple weeks away from the 52-week highs. And I thought we were going to break up, but obviously news is news, and there's nothing you can really do about that. Sometimes you hit resistances and you move down, but that makes another buying opportunity. Amazon's not going anywhere. They're one hell of a company, and I see them getting over these 52-week highs by the end of the year once again. You had the Blue Origin crash. That's not helping the current stock price, but you got a rallying Bezos on the internet saying that they're going to be back, no problem, which is great to see. The space race is going to be a huge part of her future. EPS growth, trailing 12 month to the previous trailing 12 month is up 36.16%. Their EPS growth quarter to the same quarter of the previous 12 month up 74.84%, which is massive for this size of a company. Their total backlog is $365 billion, and it grew 50% quarter over quarter as of recent earnings. They have a 28 AWS year over year growth, and a $225 billion chip backlog. So they're getting into the chip making, manufacturing. They're kind of into everything. If you really think about it, consumer staples go up, people are shopping again, they're going to be doing well. Data centers go up, they're going to be doing well. They're getting into the infrastructure, the power generation and supply, chips, building chips. They're getting into the space. They're, you name it, they're doing it pretty much. Advertisement business, the AWS. And in March, I had a call at 210 to buy, and it is up over 20% from there. And I think we still have the best yet to come with Amazon. All right, Plug Power. Once again, another very hated stock out there. I would put it up there with PayPal and with Trade Desk. They do hydrogen power, and Plug Power is kind of a turnkey from scratch. They will help build your power plants. They will do your help with your storage facilities. They will provide the the hydrogen to you, and they ship it, they contain it, they do pretty much anything and everything when it comes to the hydrogen side of things. And Plug Power has been on my radar for multiple years now. I wish I would have been buying way back when. You can see the 52-week range low was 80 cents. 52-week high is $4.58. That's a 5x from the low to the high in the last 52 weeks, and we're down to 390 today. We're hovering right around this resistance though at the $4 mark, and the lower resistance is going to be like 320. Anywhere in between this channel, I still think Plug Power is a buy. I think they have a lot of growth ahead of them. I think hydrogen is going to be a part of powering the future, and I just feel it in my bones. I believe in it. I think it's gonna be doing great things in the future, pretty much from here on out. Their EPS growth trailing 12 month to the previous trailing 12 month is up 42.61%. Quarter, the same quarter of the previous year, up 14.29%, which we would like to see that a little bit higher. But the other growth, 42%, is massive. Their revenue is up 22% year over year at 163.5 million. They do have a $724.1 million backlog, and they are targeting to be positive by the end of the year. If they break into positive earnings and they start providing that moving forward with this same kind of growth, they are going to be set up to grow, and they're going to be set up to just outperform so many other of the markets. It is energy, it is hydrogen, it is highly speculative. Please, before buying any of these stocks, make sure you do your own research. And if you enjoyed this video and you want to watch other videos that I'm going to be coming out with, some are going to be a little more in depth, some are going to be general coverage, then please hit the subscribe button. And if you stayed for the whole video, smash the like button. I'll see you in the next one. Bye.